India's IT sector is buzzing amid the ongoing Q1 earnings season. The results of the three leading players have put up a somewhat mixed bag picture, but all claim the industry could see good times ahead. While TCS sequential decline in revenue missed estimates, Infosys surprised Street by posting its best ever quarterly performance in a decade. The company also raised its revenue guidance to 14 to 16% from 12 to 14% earlier amid strong deal wins. The third biggest player, Wipro, is trying to gallop ahead. Under the new management, Wipro has turned out its numbers over the last few quarters. In June, Wipro not only beat street estimates but posted highest ever organic quarterly revenue growth in 38 quarters, way ahead of its own estimates. And the performance by Tier 2 companies has also been strong, with the likes of Mindtree, L&T Infotech and Cynet posting noteworthy results. No wonder this outperformance is getting reflected in the stock price movements of these IT players. Infosys, Wipro, Mindtree and L&T Infotech had scaled fresh record highs post Q1 show. But the biggest cost factor for them is manpower that can eat away into their margins. Now let's take a look at how analysts are interpreting the results and what lies ahead.
That revenue trajectory is holding up well in 1Q. But if you see from an FY22 outlook perspective, companies are still very, very cautious in terms of revising their outlook despite having a very strong 1Q. Net for FY22, based on the results out so far, leaders are likely to grow at 15 to 18% in FY22. Overall, TCV trends were strong, but new deal wins showed some signs of softness during the quarter, while renewals were very strong in 1Q. Now coming to the cost side, cost and attrition were the two numbers to look for in 1Q. Both are up for almost all the companies. Some have also cautioned on fixed costs returning back, at least partially, in second half, because the Western key markets are sort of opening up, and therefore there's a beginning of some of that spend, including travel cost, coming back. In this quarter, subcon costs were up for many companies, but that is something which is expected to reverse over medium term, given that the hiring was also strong. Cost increases were high to the extent that absolute EBITDA was flat for most of the companies over the last 2 quarters. Outlook for FY22, companies have guided for a decline in FY22. So what we expect is, given our growth expectation, on an absolute basis, EBITDA growth is likely to be sub 15%. Here are Emphasis, Birlasoft and Cynet. These companies are likely to show acceleration in top line over the next 12 months compared to what they've done in the past for various reasons, and are also likely to see some expansion in their margins. This is unlike the sector where most of the companies may see some margin pressures from the highs they have seen in FY21. Now, incidentally, these companies have not seen highs in FY21, and therefore their trend line should still move up from a margin perspective, 22 versus 21. Therefore, EBITDA CAGR for them, for these three companies, is likely to be ahead of the revenue CAGR that these guys may show up on a consolidated basis. These three companies also offer some valuation comfort on our estimates compared to the sector.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com.